Hi everyone, and welcome back to another simple daily practice drill I think you can use to become a better trader. And this one's called When Swing Points Break. This is the third video in a series I'm doing called Trade Like a Samurai. And in this series, we're focusing on the fundamentals. In martial arts, it's crucial every day that you practice those fundamentals. But as traders, do we actually do that? In this series, I'm taking fundamentals that I think are critical to build on great trading skill.
So if you've been practicing the last few drills on swing points, you'd be looking at the exercise like this. Market's going down, new lows, reversal attempt. Now we get a new low, swing point, new low. Okay, new low, then more swing points. And you're drawing your swing points on the way down. Maybe you use there, maybe you use there, new low, reversal attempt, goes to a new low. Here's a swing point, another new low, swing point. Now we've broken a swing point. So I want to talk about what happens when we break swing points. Well, firstly, we know when we break a swing point, trend traders tend to exit. If I'm in a bull environment and a swing point gets broken, I might look to manage out of my swing position if I haven't already, or I will look to scale in and then look to exit the position at a new high. Or in a bear trend, you're going down. Once your swing points start to get taken out, you'll either look to manage that position or exit at a new low. Some traders will have already noticed we had an inside bar here. That was a warning that the market was hesitating. We've got a lot of tails below all these bars. That's a problem. You can also see the tails here. So some traders were already looking to exit at new lows. That's what creates this big bar. But let's look at what happens when it breaks. So what typically happens is you get a measured move of that last leg. Here I'm taking it from the absolute low to the swing point and I'm projecting it up. You can see here we actually went more than one times up. They're actually getting a swing out of that. The range expanded twice. So this is the last leg of the trend. And so that measured move there is one target for the bulls. What also happens is if the bulls go above this swing point, we call it a trading range. But if we break two swing points, we'd say the market has flipped to always in. So the chance of this being a trading range is high. Once we now break and close above this swing point here, we've got a measured move of this whole range, and the market's actually always in long. Now, when we opened yesterday, we were opening always in long, but we're already at the measured move target. And this is a common open. Opens that start with a wedge formation. So we gap up. So we've gapped up, and then we have a wedge pull back to the moving average to get long. And that's because we actually flipped always in at the end of the session before, and traders are looking for places to buy. So even though I thought it was okay to be short up here back to the moving average, selling down here didn't really work out. And that's because we flipped this swing point here. Okay, well, let's carry on. What about as we go up? Well, we've got a gap up and we're making legs down. So you can have minor swing points in here. We've got some inside bars. Do we go above that inside bar? That high's 86.75, 86.75. No, it's a double top. Then we get a new low and we close above it. So traders will often look to project that measured move up. And I thought it was interesting last night because I'm trading ES at nighttime that we missed that measured move by one tick. That's really interesting. And I was long. I bought a pullback in here and I'm just about to get to my target. Then I get 23 and I pulled my stop up because I thought, yeah, well, if this starts going down and I'm high in a trading range, I want to get out. I got taken out on 24 and that's why I was comfortable to switch to short on 25. I thought good chance of a second leg. And if the bulls have gotten stuck, any of the bulls that didn't get out are about to get out. And that was a great trade. That was the last trade, my last trade this week. So measured move up. And now you can do this exercise. This is a great practice exercise to do on your charts. Here's the last leg of the bulls, measured move down. You can also, once this leg breaks, this leg also broke. So then you do a measured move here. So this concept of swing points breaking and setting up a measured move is a fantastic drill to practice. What about on the way up? Last bear leg here, we break to a new low, then we go above. So at this point, the bear trend has ended because we went above a swing point. And I want to talk about this in the next section. There's an image on my blog which shows you the measured moves. And that's a way you can practice. I want to talk about two entries or two techniques that you can use to trade swing point breaks. This first technique is called swing point, breakout, pullback. Okay, let's try out this little magnifier. That's the swing point. That's the low. No, I'm not convinced on the magnifier. This swing point broke, so we're in a trading range. The first clear bull entry is the 51 close. If you buy that entry, 51 close, you can see that's the first close above this line, which is the bear swing point. Some traders bought there for a possible swing. You can see if I move the line across that other traders waited for the breakout to get follow through and then bought the pullback. And where was their target? Their target was exactly a measured move of this range. So I'll say that again. This swing point broke. The measured move projects upwards. And so traders are buying at exactly the 50% of that target with a stop one tick below the low of that bar. So they're not using 47. And so when you practice this drill, you're using hindsight to go, okay, when that bar happened, why did the pullback go exactly to that point? Because a stop with one tick below there, entry there, is that target. This is called swing point breakout pullback. Highly recommend practicing this drill on your charts. Let's take a look at the second technique. This is one of my favorite techniques. It's called swing point rebound. So same chart, same break of a swing point, but it's a different entry. Here, the moment we break out of that swing point, it's put us into a trading range. As soon as that happens, putting orders in the lower third and the lower half with a stop one tick below the range, aiming to go back to that swing point again is a great entry. If you take the earlier entry here, your probability is lower. This could just keep going down. And this bar has not closed yet. But if you got filled there, you were not able to get that entry here. So you got rewarded for getting in earlier, and therefore you can hold longer for that target. If you waited for this bar here, the second possible entry was at the blue line. So you wait for this bar to close, and now you put your entry on the blue line, and there's your one-to-one. So these are the two static charts I've got in my blog that you can take a look at. Let's have a look at a chart and see if we can find some more. So what about here on the way down? We didn't break out above that inside bar. We did go above that inside bar. There we go. Stop one tick below that bar, going for a measured move target, using 9, the last inside bar as the swing point, 12 low, 882, stop below here. There's your 2R target. You can see as well, some traders just bought above 12 during 13, going for a similar target. What was their maths? So you've got a measured move target of 899 to flip this fib round. Let's have a look at the rebound trade when it doesn't work. Inside bar, we go above it. What about here? Here's a swing point. What about here? Here's a swing point. It gets broken on 37. I use my fib tool looking to buy in the lower third, looking to buy at the midpoint. And what happens? I get run over. Why is it not a great entry? Probably because this channel is so tight. This is the first pullback to the moving average, and it's a strong close. This is a bit more sideways. So there's an example of it not working. And you've got to study when things don't work so you know whether you're in a good trade or a bad trade. When the channel is tight, here we immediately break that swing point. Bears were not able to sell in the top third or top 50%. We never got back there. What about here? Swing point broken. If bulls buy in the lower third and the lower half, maybe they got a scalp, maybe they got stopped out. I like this entry on bullish opens. The market has a habit of going one tick below swing points before it resumes. So I look at this whole pattern in this way. Here, we broke a swing point. So if this is going to be a trading range, bears are going to want to sell in the top half. But this whole day has been bullish. This is the first time we've been below the moving average. The market's probably not going to reverse here. In which case, all those orders to get short are probably going to end up either as a losing trade or a trade those bears are going to have to get out of. And so buying in the lower third of this range, stop below 48, betting that we're going to get back up to the high of that range. Even if you don't take the low probability entry there, you can see right in the middle, consecutive bull Mars. Those traders probably don't want to sell. You're buying at the moving average in a bull trend. Great entry. So you can use it in both ways. Sometimes the entry is so quick, you don't really have a chance to take it. Other times you have a long time to take that entry going for that target. Break that swing point. Instead of betting on a measured move, bet that if we come back into a range, we'll test that again. New low. Here's a swing point. That swing point breaks. Here's a target. Traders buying in the lower third of this range Well, bulls, breakout, pullback, aiming that once this breaks, they're betting on the measured move to go up. Now, if you don't take this earlier entry, that's okay, because you know if that leg breaks and gets a measured move, it's also going to break this point here. So this is broken, and that gives you a target that's further away. So this is a useful way to set up swing entries. Where's your stop? Well, your stop needs to be one tick below, which means that needs to go up. This measured move is going to project up there. At this point, we've broken 2 swing points above 52. We've broken above 50. The bulls don't need to use a stop here. They can use a stop here. Stop 1 tick below, target at 43.50. There's your swing entry. There's your measured move entry. So now you've got 3 exercises to practice. Looking at swing point breaks and measured moves. Sometimes they hit. Here we broke out above a swing point, but it didn't get a measured move down. Swing point measured moves. And then based off those measured moves, how can I construct trades going to those targets? Well, if it's a swing point break measured move, I'm using a breakout pullback entry, which is I see the breakout and then I try and take the pullback, or I see a bigger breakout and I'm trying to trade the pullback towards that measured move. Alternatively, I'm using a swing point break rebound. I break, buy for the test. Break, try and buy for the test. And you can do that in both directions.
Well, thanks very much for watching. I hope you found that valuable. In this video, we talked about what happens when swing points break. This is the 3rd video in a series called Trade Like a Samurai, where we focus on the fundamentals of trading that you've got to practice every day. We talk through what happens when a swing point breaks, potential futures that can set up, and I also outlined at least 2 different trading strategies that I think you can use to set up your next trade. Thanks very much for watching. My name's Tim Fairweather from Zen Trading Tech, and I'll see you in the next video.